Today we're going to talk about the top 5 indicators that I use on my day-to-day trading life. So I'm going to go and show that to you here on this video. Now, what is indicators? So a lot of traders, they use indicators to help them either buy or sell a stock at a given time. So it could be a long-term investment or a short-term investment, right? So either way. So for example, you might be looking to buy a long-term investment at a right time where you're like, that's a good price, I'm happy with. Usually with long-term investment, you shouldn't be worried about a small price change, but a lot of people, they are like, if I wish I had, I wish I had waited for when the price was lower, right? I'm gonna show you exactly how to do that in this video. I use 5 of these things and they really, really help me. And one of the things I want you to, put it in your head is the fact that the simpler, the better. You don't want to overcomplicate it because that's going to make your life much harder. Because think about it like this. If you're using 10 indicators, 5 of them will tell you buy, the other will tell you don't buy, and you're confused, right? So I like to make my life simpler by using these 5 ones. It's called the RSI. That's the most popular one. And the SMA line, Doji, volume, and Fibonacci retracement. I'm going to talk about those here today. I'm going to go and explain to you in the most simple way I can just to help you out. I'm not going to confuse you, okay? So RSI is pretty much strength. So how strong is the market? It's pretty much relative strength. So how strong is the market? Now, keep in mind that so RSI is an oscillator, meaning it's going from 0 to 100, like this, right? Now, keep in mind that if the RSI is above 70, it's called overbought. Now, overbought means that the market is really strength, okay? It's strength. It's very strong. And if it's below 30, it's called oversold, meaning it's not that strong at that point. Now, how do you use that? Now, 2 options, right? So keep in mind that everything that's way up flying, it has to come down. Everything that's like flying low, it has the potential to go up, right? Think of it like this. So if a plane is like, flying in 40,000 feet, woo, going right now, at one point or another, it has to come down. That's one. And number 2, if it's like, on a ground, it's a plane. It has to go up. It's a stock. So it has to go up a little bit, at least high. So just know that. Now, how can you use it to either buy or sell? Now, 2 options, right? So for example, let's look at something right here. So I'm going to look at a random stock that I found on Finviz right now. Okay. Now, so I'm on a 15-minute time frame and the RSI is 46. Okay. RSI is 46. Now, I can play 2 ways. So number 1, what I can do is I can look at the support RSI, which is almost 40 roughly, or even if you go, I don't want to go a day before because there was no volume, right? This is a trending stock right now. So a support RSI for today is almost 40. So what I might want to do is, my RSI, so right now the RSI says it's a good time to buy because it has lowered it a bit, it's lowered up. If the RSI was way high right here, you see it right here on the high, I'm like, no, I don't want to buy because the price is going to fall down the second I buy. That's one thought. Now, what I can also do is I can buy it at a point where the RSI is trending upward, okay? Keep in mind, it's trending upward. So it's right here. It's almost 61. It's almost at like 70. And why would I buy it at an RSI 70? Because I'm trying to ride that wave and capture that good amount of money, but I will get out at this point. I will get out. So if I buy it at an RSI of 70, I will get out when the RSI is at about 80 because it means that the strength is too high. It's like building up. It's about to burst, meaning it's about to fall. So you can play both ways. But as a simple trader, if the RSI is way high, wait. Okay, wait till it drops to like 40 or 30. Then that's a good time to buy. Okay, next, moving on. Next up is the SMA line. So SMA line pretty much means that it's a simple moving average of, like let's say, for example, I'm going to go ahead and do my SMA line right now. So the SMA line, I'm going to open it right now. SMA line. Now the period is, so pretty much SMA is an average. So I'm trying to get an average of last 10 closing prices. That's an SMA line, smooth average, like it's a smooth line. Now, how do you use SMA line to trade? Now, here's what you do, okay? So, you wanna, if you're trying to, if it's a long term, then, if the RSI is at 30, 40, buy it, don't worry about the SMA line, you'll be fine, okay? Long-term investment, you'll be fine. Short-term investment, like a day trading or swing trading, you wanna buy, so for example, let's say I'm day trading, right? So right now, I'm gonna do 15 minutes right now. So as you can see, right? So when a price is trading above the SMA line, that means it's doing good. It's good, you are good, you should buy, okay? If the price is trading below the SMA line, it means it's falling price. So right now, this is a live market right now. So let's take a look at it right now. So that's the SMA line, right? It's trading way below, and the RSI has lowered up, right? Now, we see a small green bar at 15 minutes, okay? That's good. Now, here's how I would play it. Now, the RSI tells me that it's gonna go back up. So if I wanna take a little bit of risk, I can buy it right now. I'll be fine. But I told you, right? The RSI tells you. So right now, if I wanna take a little bit of risk, I can buy it. Now, if you wanna avoid risk, what you can do is this. You can place your buy limit order. Don't do market order, guys. A lot of people are doing market orders. So market orders, don't do it, okay? So wait till, so you see the SMA line, wait till it's like a penny above your SMA line. That's when you should buy, that's when you should place that limit order, because when you do that, you're pretty much riding the wave, okay? Right now, like I said, the RSI was low, right, while we were talking, but I told you it was gonna go up. The RSI tells me it's good, right? And also I'm looking at the volume here as well. So SMA line, make sure if it's trading above the SMA line, it's doing good. If it's trading below SMA line, maybe it's time to sell, okay? Now, let's say you bought it. So see right now, this is a good example. So this is an SMA line, and you see it right here. You see a green arrow, and it's like above the SMA line, you buy it right here, right? And you see two bars, it's going up. Usually people will take profits at this time, okay? And you see it's about to go back to the SMA line, you should probably sell because it's about to drop, okay? Now, right now, I told you, right, that, so right now you see a green bar. Let's look at it, let's go back to 5 minutes, and look, we see 3 green, and it's about to touch the SMA line. So right now, if I want to take a couple pennies risk, I should go ahead and buy it right now. But if you want to stay safe, you wait for it to hit that SMA line. That's a proof right there, okay? So that's how you use an SMA line. Next up is Doji. So Doji, what is a Doji? So Doji, think of it like this, okay? Think of Doji like this. I'm gonna go back and show you a 15-minute. Oh, there was a Doji. So Doji is pretty much like this. So you got your buyers and you got your sellers, right? So think of it like, they're doing tug of wars, right? So they're pulling. So if a buyer wins, if there's more buyers, then you see a green bar. If there is more sellers, you see a red bar right now. What if the opening price and the closing price doesn't change? It's not like this, and it's not like this either. So what does that mean? This means that the buyers and the sellers have decided, hey, we don't know. So Doji is always important because at that point you're like, okay, something is about to happen. So when you see a Doji, it's either about to fall down or it's about to go up. In this case, we saw a red bar already, and we see a Doji. That means sell, because it is going down. Okay, you got that. Cool. So you understand what a Doji is. So watch for Dojis, and keep in mind that there are sometimes imperfect Dojis. For example, right now, this was a perfect Doji. This is also a Doji, but it's not technically correct. Still a Doji, okay? Still a Doji, but it's not perfect. Keep that in mind. So Dojis play that role. So whenever you see a Doji, watch what's happening prior to the Doji, and then take an action. Because if I saw a Doji like right above the SMA line, I'm like, okay, above the SMA line, I'm gonna buy. If I see a Doji below the SMA line, hey, something's about to happen. But keep in mind, you see what the price was prior to a couple bars prior to the Doji. Make sense? Cool. Let's move on. And volume, of course. So why is volume important? Now, This one right here has a lot of volume. So volume means that how liquid is the market, how much trading is going on. So if you're a day trader, make sure you don't buy a stock that has like no volume, because you're not gonna find a seller. Okay, keep that in mind. So make sure there's a lot of volume if you're trying to capture that. If you're trying to scalp, or if you're trying to make that quick money, make sure there is volume, because volume means people are interested. And like I told you right earlier, I told you whenever we were starting this video, I told you this was gonna go up because the volume is high and the RSI was at like low. It was about to go up, and it did, and it is going up right now. So I told you, right? I told you way at the beginning of this video that just by looking at the RSI and the volume, this is a buy, and of course it was. Okay. Now next up, Fibonacci retracement. Now Fibonacci, here's the deal. So Fibonacci is pretty much, we're trying to see what the pullback is, what's the support, and what's the resistance. Now keep in mind that it's not perfect, okay? And we can use Fibonacci for both high volume and short. High volume and small volume both. But also it's much more important to it's usually much more efficient if you use it for a long-term investment. For example, let's go to Apple. Apple right here. So now let's go back. Right, I'm gonna go and get rid of a few things here just to make it less confusing. Okay, now this is Apple. We had a split. Okay, now so the split right here, right here. Today's Monday, so if you see the gap because it went up, that's a gap right here. Okay, don't worry if you don't know what a gap is. Don't worry about it right now. So I'm gonna just take 2 points, okay, and I look at the highest point at this time. So okay. So always 0.618 is called the golden ratio. Okay, golden ratio, and the theory is that whenever you take 2 points, it's going to give you the pullback range. So I use Fibonacci to decide if it's a good buy or good time to sell. For example, right now, right, if I was planning to buy Apple, I know a couple of things, okay? It had a split. That means the people were driving the price high, but people take profits, so it's about to go down. I know that, number one. Number two, Fibonacci tells me that, hey, it's gonna come down. You see the this is the golden ratio, but I like to also use the 0.5 ratio as well right now. So if you were to buy Apple, like today you have to buy Apple today. The good price to buy today would be about, it's a range, okay? So it's not exactly. So I would buy it at about 125. 125 is a good price to buy. Now, and trust me, as you watch this along, and it is gonna hit that price later today or by tomorrow. We just don't know when, but usually a day or two, and depends on how long of a time frame you selected here as well. So I selected just Friday and today, so this should fall back to 125 very soon. Probably today it's gonna fall down. So, and that's a good buy. Okay, now. So you know when to buy, so you know when there's going to be a pullback. Now, how do you use Fibonacci to take profits? Okay, so let's say you bought it, right? Let's say you bought it. So we go from, I'm going to show you a different point. Okay, let's say you bought it right here at this point at 124. And you're trying to make a quick buck, okay? So I'm thinking, Apple is going to be a good long-term investment. You know that. Now, if you're trying to make a quick buck, you bought it at this point, right? But you go from the last highest point that you can see or imagine. This is the last highest point, which is right here, 127. And you bought it at 124, right? The golden ratio tells you that it is going to be the high, before it falls back, it is going to be right here. It tells you right here, this is the golden ratio right here. It tells you the price was 125. I knew that well before it happened. So that's how you can use Fibonacci to make a wiser decision, give you a better range on when to buy and when to sell. I hope you enjoyed these 5 indicators. I really enjoyed, teaching them to you guys. On the comments, go ahead and post if you have any other questions, and make sure to subscribe to this channel for other stock videos. Thank you so much.